All right, guys. So I am red on the year, and it doesn't feel great, but I'm not worried. And I've got three things that I think you might want to consider if you're also in the same boat. I'm going to give you that and more coming up. What's up, everybody? My name is Brad, and this is Own the Chaos. The stock market is crazy and chaotic. We've made it our mission to help you own it, and it is a little crazy right now. As I said, I'm down 9% compared to the S&P 500's 5%. And if you are new to investing or you haven't heard this before, everybody usually tries to beat the market, right? And the standard is the S&P 500. So if you can do better than the S&P 500, then you're doing a pretty damn good job. But one thing that I definitely want you guys to consider before we get into these three strategies that I have set in place is to understand that we're still in the first quarter. It's just a few weeks out of the entire year, out of the 52 weeks of the year. And I want everybody to just take a breather before we get started. I also want to mention that I'm going to be showing you all the positions that I'm in at the end of the video, so make sure that you guys are sticking around for that. And if you guys want to learn more about investing and learn more about financial freedom and how to achieve it, make sure you're hitting that subscribe button, the like as well. Would love to have your guys' support in that fashion. All right, so the first thing that I wanted to talk to you guys about, especially if you're in the same boat as I am, is to not react emotionally. I just kind of mentioned that. I just kind of worked my way into that just earlier, but really just hammering this home. Not getting afraid of the things that you're in, unless you're in stuff that's super speculative, which we've talked about leading up to, now, that if you're in speculative things and the market is very uncertain, then you probably don't want to be into those unless you have a super long outlook on those types of stocks. And I'm talking about some of the EV stocks, some of the SPACs that we've seen go all over the place. Anything that is speculative in nature is going to be affected the most when the market is uncertain. And so I've backed out of those. I've taken some, closed a lot of those positions and moved in the stocks that I really, truly believe in, even during a down market, which is why I'm not really all that concerned about it. It's tough. It sucks. Nobody likes seeing themselves in the red. But at the end of the day, like I said, we're in a few weeks' time here. Out of the 52 weeks in the year, I have plenty of time to continue holding the stuff that I'm holding into, and I have the discipline in order to do that. So it's really important not to just react emotionally. I can't tell you how many times I've seen folks just rip everything out of the market and say, you know what, I'm going to take everything out for a loss. I'm not going to, play this game. I'm going to get 100% cash. Well, in my opinion, I think that's a really tough decision to come to, especially when we know how bullish the market and the economy, everything's reopening. So being out of the market completely doesn't really make a whole lot of sense. And so at that point, when you're ripping everything out of the market and you're going to try to buy back in at the bottom, you're essentially trying to time the market, which is extremely hard to do. And I would say impossible at this point. Some people get lucky buying in at the bottom, but you really don't want to base that off of your own buying decisions, because at the end of the day, it's still just very emotional, and you really don't want to have your account impacted by that. Because I'm telling you, I've seen this before. I've done it myself, where you just sell out of something out of spite or because you're pissed off. And then what happens? The very next day or the very next couple of days, it goes off. Whatever stock you're in, or even the market in general, it just goes off. And there was no way that you're going to be able to tell that was going to happen, but you sold out. And now at this point, you're chasing. So you don't want to be in that boat. In my opinion, if you still have cash on the side, I think that's fine. But I don't know if I would want to be out of the market completely either. Speaking of being in good stocks and good companies, that's going to be number two, making sure that when the market's uncertain like this, that you are in good companies and good stocks with good balance sheets that don't have a ton of debt or have at least a good outlook. At this point, when you're, like I mentioned before, if you're looking into SPACs at this point, or if you're looking into, the EV plays, some of the other speculative energy stocks that we've seen, not all of them, but ones that just, weed companies in particular, my God, all the debt that they have wrapped up into that is absolutely insane. And it blows me away to see how many people are just dumping a bunch of money into these companies and then wonder why they're seeing so much volatility. Well, again, when there is uncertainty in the market and we have no idea which way we're headed each and every day, it makes it difficult to be in some of those speculative plays. So that when you're getting into good companies, that is really the best strategy, aside from managing risk and making sure you're taking smaller position sizes and that sort of thing. But I wanted to just kind of show you what I'm in. I think that, in my opinion, that even though I'm red, in this account, I'm down 9.7% year to date, which sucks. It's not pretty, but when you compare it to how I did last year since inception, if you look at this, I'm still beating the market overall since I started this account, 36% compared to a 17.5% compared to the S&P 500. So overall, still very happy with the way that the account has been performing, but year to date, it just isn't all that great at this point. So it does take some patience. And again, I'm in Spirit AeroSystems, which is another reopening play. It doesn't have anything to do with tech. They are a fuselage. They build fuselages for the Boeing 737s, all that good stuff. They have other clients with Airbus and stuff like that. And so when you're seeing demand increase for airplanes and air travel in general, Spirit AeroSystems seems to be one that has just been lagging behind. And obviously you can see that's the only one that I'm green on currently. Square, you can see that Square, obviously this is a really good company. I don't think I have to say too much else about this other than the fact that, yes, it's tech, and while tech has been dramatically affected because of everything that's been going on, Square is also a reopening play. So the more that we see companies opening up and small businesses opening up, the more in demand Square will become. And so this is why I still remain in Square, even though I'm red. I actually will be looking to add to this as soon as I can. Next is Airbnb, and I think this is pretty self-explanatory as far as a reopening is concerned as well. Yes, my average is high on this, but it is an average. I want everybody to understand that I've been working my way into this position, and I never try to time the market. So this looks like it could be a really good opportunity to add here, and I think that I may. I just want to see how the market reacts and how it actually plays out, and I want to make sure that I'm managing risk appropriately, which is what we'll get onto a little bit later. Next is Snapchat, and even though this is a direct tech stock, like I had said before, I don't want to completely be out of tech. I want to be in tech to some degree. I'm in Snapchat. I feel really good about the social media and really the all of these platforms like Google, Facebook, Twitter. I think, again, with smaller businesses opening back up, they're going to need to be able to make that presence. And in order to do that, they need social media to do so. So Snapchat, in my opinion, is set up well for this event. Penn National, very clear as well. Not only do they do well on the tech side of things because of sports betting, and we've seen how more and more states are legalizing sports betting, but Penn National is also a regional casino. So the reopening play, again, plays into Penn's bullishness as well. I don't know why I said bullishness like that, but anyways, you know what I'm trying to say. Tesla is Tesla. I'm never selling Tesla. I'm going to continue to hold on to this one, continue to average in as well when it makes sense. Right now it doesn't, so I'm just going to leave Tesla sit there. So as you can see, I feel as if that this is a really balanced portfolio overall. If I had to change one thing, if I had to be in one other area of the market, and maybe I would say two, it would be energy and the banks. I really feel as if I should have been into Goldman Sachs. That's my favorite bank out of the industry. JP Morgan is there as well, but I really like Goldman Sachs. I think that would be one that I probably should have gotten into, and I was into, but sold out way too early. But I should have stayed into it. So if I had to go back and look at this portfolio and see and ask myself what I would change, that would be one additional stock that I probably would keep myself into as well. But overall, still very happy with the balance that I have here. And now it's just a patience and waiting game for things to kind of really come back, because I do think that they will. Which leads me to the third thing, and that is managing risk. A lot of people will just double down and continue to double down on whatever stock that they're in, and one individual stock opens you up to so much risk. As you could see in that portfolio, while it was balanced, I think I still am a little overweight on Tesla, in my opinion. 30% of my account, it makes up Tesla. And while I know and I have a really high confidence that that's going to turn around and I won't have anything to worry about, it is going to take some time before that actually happens. And so while I'm waiting for that, I could have been using that money to be putting into something like a Goldman Sachs, like I had mentioned, and I would have felt a lot more comfortable with it. But it is what it is, and that is something to definitely take into consideration, is making sure you're managing risk. So when the market is super volatile like this and very uncertain, it makes sense to take smaller position sizes and that sort of thing. And notice I said smaller position sizes and not being completely out of the market, because like I said in the beginning of the video, that's something you really don't want to be in a position you don't want to be. You don't want to be chasing things either and trying to time the market. So taking smaller position sizes makes a ton of sense. Having some cash on the side for when the market does start to turn around makes a lot of sense. But that is how you manage risk. Scaling in, scaling out, when you're ready to take profit, all of that good stuff, it makes a ton of sense instead of just going all in on one particular stock or going all in with anything in general. You want to make sure that you're well diversified, well balanced, all of that. And I think that is the best way to manage your risk overall in the markets. And so what do you guys think? Are you also in the red this year? What steps have you taken to manage risk and rethink your strategy and kind of regroup? Let me know in the comments below, because I would love to hear from you. Out of these three, which one was your favorite? Let me know in the comments. Love to hear from you guys. If you like this video, certainly would appreciate a thumbs up as well. This was a little bit more of a serious video. You guys know that I like to goof around a little bit, but I wanted to really kind of make sure that I was hammering home these points. And so I want to make sure that people aren't really kind of losing their minds and thinking about what the hell am I going to do? So just calm down, take a deep breath, like I was saying, and I think you guys will be just fine. So make sure you're hitting that thumbs up. I would love to hear from you guys as well. And that's going to do it for me. As always, folks, I will see you all before the bell. And B. Smith is out.